So, Paul, thank you very much for joining us here today on Blue Notes. Through the work that you've done with the Financial Stability Board's Taskforce, what are some of the key considerations you think businesses should be thinking about with respect to climate-related financial disclosures?
Well, the Taskforce made a number of detailed recommendations in areas that you should be reporting on: your governance, your strategy, your risk management, and your metrics. And it's the metrics which is proving to be the most difficult thing to work out, the actual quantitative aspects of the disclosures. And then, again, trying to shoehorn all of those into mainstream financial reportings was one of the big messages, that it's no good having this as a separate document somewhere outside of the main financial areas.
So talking about the metrics and the targets, how much guidance is the task force or other bodies looking to provide companies in terms of how to set those targets?
At the moment, it's not very specific. The nature of the task force recommendations are that you should report what you are doing, rather than here's a list of things that you must do. But of course, everybody wants to be best practice. And I think one of the other messages is it's almost impossible to do this purely on your own. And so working together, I think, is actually a key aspect of trying to work out exactly what it is each company is going to have to do.
Well, here in ANZ, we've actually just started that process ourselves, looking at part of our institutional lending book in one particular sector and working through what that scenario analysis may mean, learning from perhaps one of the more challenging sectors, and from that then thinking about how we apply it to other sectors. So we'll be very keen to actually get a bit more guidance on how it may be applied.
And so I did a round of discussions with chief executives of UK-based banks earlier in the year, actually including an Australian-based bank. And it's clear to me most of the banks up until now have seen climate change as a social, ethical, moral issue, if you like, rather than a financial issue. And so they're just slowly moving, realising actually this is a mainstream financial issue. And that requires quite a lot of detailed work. For example, you really need to go through all your assets and tag them in some way to find out what the exposures are they green assets or not? And that work hasn't really been done yet in most institutions. So there's a lot of very basic work to do, particularly for the banks, who I think, generally speaking, are slightly behind, say, the insurers and the asset managers in looking at the risks.
My sense is, having spoken with a number of institutional investors with respect to climate change, they're almost ahead of some of the banks.
Yep.
And certainly most of the corporates. Is that what you're seeing in Europe as well, that the investors are helping drive this thinking? Yeah,
well, the insurers have been in the forefront because they have the long-term liabilities as well as the assets, and they need to work it out, and they write catastrophe risk insurance and so on. So they've got to be ahead of the game. And people like Lloyd's of London are amongst the best in the field. And then the more general asset managers, they've got portfolios of equities and long-dated bonds. Again, the risks are very material for them. So again, they've had to move quicker. For the banks, the risks are more nuanced and they're more balanced. For example, you may do lots of property lending, but it's likely all to be insured out to the insurance sector. So a lot of the physical risk is passed outside the banking sector. Right. I think for the banks in particular, there's a lot of business opportunities. So it's not just downside risks, it's upside opportunities. And banks have been financing changes in the economy for hundreds of years, thousands of years, but they don't all get it right. The ones that get it right are successful. The ones who don't get it right will tend to either go out of business or get bought up or whatever. And so spotting the right people to be lending into is a crucial part of the work for banks. Whereas for the other sectors, I think it's more about the downside risks as well.
Well, thank you very much for joining us today on Blue Nuts. I've really enjoyed the conversation.
Well, thank you very much for having me.
Thank you.